Good afternoon, everybody. Welcome back to Markets for Millennials for the weekly wrap of January 31st through February 4th. And we're going to look around at the markets today. I'll start on the equity markets. We've had a lot of eventful news this week. I'll try to hit as much of it as I can, but this update will be pretty quick, hopefully this week. As before, I'm showing I have actually kind of a mess on this chart. I'll explain why. But I have the 50-day moving average in blue, the 100-day moving average in yellow, the 200-day moving average in red. And there's a couple things I wanted to show because I put out the warning over the last 2 weeks as we began selling down that I would be watching the moving averages in terms of momentum, not necessarily for whether or not we're going to cross through them, but what's going to happen when we bounce or whenever we bounce, if we're going to bounce. And so there's a couple of different things that I could point out on these charts. And so I'm going to do my best to kind of summarize all of this and also explain why I've got these levels, Fibonacci levels on the screen as well. So we'll start with the moving averages. So let me hide this for just a quick second. I have to get this up here. So showing just the moving averages. So we had the sell down, passed through, just cut right. Cut through the 50-day, bounced, cut through the 100-day on the follow through, cut right through the 200-day moving average, consolidated under that for a few days, and then had a really significant bounce up. And on the S&P, we kind of bounced up towards around the 100-day moving average and then came back down. And in fact, this red candle, as we look a little bit more closely, this was this candle more than showed some kind of resumption down. But then interestingly today, and the futures charts I've noticed on TradingView have been a little bit funky. It doesn't seem like they're tracking properly. But what you can see here is that we today closed higher than where we closed yesterday, and you can see that we wicked all the way down to basically just onto the 200-day moving average. And so, see how that just happened right there? That's crazy. So what's really interesting is I was actually really concerned in a video. It was either last week or the week before. I talked about how you have to be really careful about just taking a short position to the downside because you don't know, without resuming down, you don't know if price is actually going to go down. Too many people, as price is selling down, it'll come down, and then after it's come down considerably, then people take the short position. So people show a tendency to sell after things have already gone down. Just in the same way that they tend to buy after things have already gone up. That's market psychology. So a lot of people, because we broke the 200-day, on that break, people took short positions. But the problem is if you took the short position, then your risk reward was really awful because the only logical, responsible places, as I talked about before, to set a stop loss would be around there or there. And that's not very good risk reward in terms of where you place your stop loss, what you're losing versus what you could potentially gain. And my hope is that when people took short positions, that they didn't just set irresponsible stop losses like right there or possibly right there. Excuse me, because if they did, then they got stopped out. And you can see all these wicks down here. It's showing that a lot of people started trying to short right there, and the market caught them on the wrong side, and they got stopped out. And then you also saw with these wicks that people took long positions and got stopped out as well. We also, obviously, we had the FOMC meeting, and that caused some chaos. We've had these sell-ups and now this sell-down. And then today, obviously, we're positive on the S&P versus previous. So anyway, I was talking about being concerned about the bounce because if you actually go back to the crisis, the March 2020 crisis, you can see we pierced down through the 200-day moving average and then came up and basically retested the 100-day and then sold off. So you have to be really careful that even though price came back up here, it doesn't mean that price is going to resume back up and we're going to get this V shape. Okay, so that's why on the short side, and I believe I said this last week, on the short side, I'm extremely cautious. I don't try to, I don't assume that we're going to short, that this is a shorting opportunity here. I'm looking for follow through to the downside. And I'm looking for, obviously you have to consider the macro and stuff on that too. What's really interesting to me is I'm wondering if this bounce, if this wick onto the 200-day is going to be if that's our retest. And I wonder if going into next week, if we're going to get a move to the upside back to all-time highs. And it's really hard to tell and see the macro picture here because the markets are pricing in, especially with today's non-farm payrolls report, which just blew everybody out of the water, along with the revision of basically all of 2021. You get the sense the market is pricing in, or either maybe that, or maybe it is pricing in, or maybe it already priced in the rate hikes. And so markets are forward-looking, and so just because the Fed right now is looking to raise rates, that doesn't mean that price can't go back up, because it's possible that the market priced that panic in here on the downside, and now that we got this move to the downside, right? What was this from wick to wick? Over 12%. Now that we got that move, is that the reset that we needed? So there's just a lot of uncertainty here. So it's best to just be neutral here and wait for clarity. So what is clarity? The moving averages show momentum, so it would be helpful if you could get above the 50-day in terms of the momentum. That would show that we're establishing the 200 and the 100 moving averages as support again. So that would be one thing that I would be looking for, but not the only thing, because obviously you don't want to go off of just one indicator. Another thing would be that we need to clear this line, this diagonal trend line right here. We need to get above it and also retest it, hopefully, and resume off. Okay, so that would be the second thing I would be looking for as confirmation. And then the third has to do with this Fibonacci level. This is a little concerning because we came right up into the 618, which is a classic, when you're going, when you are, in a crash or going to the downside further, and this works to the upside as well, but in reverse. The retrace to the 618 and then resuming back down is usually the sign that things are going to go lower. Or it often is, I shouldn't say usually. It often can be. So what I want to see is I want to see us get above the 618 as well. Not just wick above it, but actually close above it. So I'm looking for that on all of these indices. Well, not the same levels necessarily, but they all have the same kind of characteristics in terms of getting above a certain moving average, getting above a line of repair, a trend line of repair, and also getting above a particular Fibonacci level. So with that in mind, let me go to the NASDAQ, in which this is a little bit, this is even more messy. So the line of repair, what's really interesting is the NASDAQ got bounced. It actually came above technically. So the level that I had was right here. And then it actually came above, and so I adjusted, after it sold back down, I adjusted my trend line to right here. Right for now, again, similar kind of thing. For momentum's sake, I want to get above the 50-day moving average. You'll notice we didn't even barely get above the 200-day moving average on this move, and the NASDAQ had a much deeper dip. The NASDAQ was 18%. So the NASDAQ has a lot more to do for repair. So I'm looking for, again, a move above the 50-day moving average, a breakout, retest, and resumption off of this descending trend line. Whoops. And then I'm also looking for, as you can see, we basically came up into the 0.5 level, which is, I guess, not technically a level, but I want to get above this level and above the 618 level to establish momentum to the top side. And it's clearing those levels that will help me to be more confident that we are just going to continue to move up. And then there's obviously this trend line, which is a little bit more shallow. The Dow, similar kind of story. What you're noticing is the moving averages are squeezed a little bit closer together. So I'm watching that. You'll notice the Dow came above and closed above the 618 and above the 50-day moving average, but then has come back down, and it's currently closing above the 200-day moving average. But again, it's the moving averages are really tight here, and in my experience, my limited experience and my limited expertise, when I see the moving averages close together like that, it's a signal that eventually we're in for a move to the upside or to the downside pretty significantly. So the question is, because again, this is momentum, and when all of the momentum indicators are so close together, so tight and squeezed together, that's an indicator that momentum is about to accelerate and pretty decently to one side or the other. In the Dow, I'm looking again to get above this line of repair, which I adjusted similarly to the NASDAQ, above, closing a couple of days above the 50-day moving average, and staying closed above the 618 Fibonacci level. So those three indices are very similar in what I'm looking for. With the Russell, again, look, this is exactly what I'm talking about. Look at the period of time in which, so like you've had the 50 and 100-day moving averages together basically since May of 2021, and then you added in September 2021 the 200-day moving average, and they were basically together that whole time, and then suddenly, boom, just down, right? And from the last touch of all three of those moving averages, if you go from the 200-day, we went down over 15% to the wick low just off of that move from the moving averages. So that's what I'm talking about on this whole concept of when the moving averages get tight like that, be prepared for a big move. The Russell doesn't look good, to be honest with you. So, and I always have said I think the Russell is a much greater indicator of the overall economy. And holy moly, as I'm looking, I'm going to switch over to Bitcoin because something crazy is going on as I record this right now. When I first started recording, I don't know if you could tell on the right side, but we were at about 3,200 on the day, and just in the time that I've been recording, we're $900 above that. So Bitcoin is having a really big day. There has been some news on Bitcoin, but to me, I don't remember if I said it in a video. I don't remember if I said it on Twitter. I don't remember if I told my wife. I don't really know. But I was saying that I thought that we were going to hit a bottom sometime around here. CTM, Jordan Lindsay on CTM called this. He had a box and he called this level also. And he was definitely up front a long time ago when price was kind of up here. So I think that this was the bottom, and I think this is the beginning of the next leg up. So Bitcoin is looking really good. As you can see, I had this flag right here. I posted on Twitter just this morning that one thing I want to be careful of is be careful of this being a bear flag on this breakout, because a lot of us were watching this descending trend line. And actually, I'm going to turn the moving averages off now because I don't need them anymore. A lot of us were watching this trend line, this upper trend line. And so when we broke through it, it was great. But then I was like, well, wait a minute, watch out. This might be a bear flag. And even if I move this up, we're broken through that too. So anyway, it looks like we're all clear there. I'm actually going to delete that line. So things look good on Bitcoin. This is actually a great Friday. I mean, when was the last time we had a great Friday like this? I don't really know. But this is Bitcoin over 10%. And actually, I'm going to do this in real time. Sorry for the delay since we're talking about Bitcoin. I just want to show you here what I did on Bitcoin, because I'm just saying this is just kind of funny. I wrote this on January 29th. So that's a little, under a week ago. I put it's going to be really fun when we get our next 4,000 plus green candle. And I put earlier, about 4 hours ago, a bit more to go, but this, and look here we are. Now, look, even in the last couple of minutes, 43.24. We're up over 11%. which shouldn't be all that surprising because if you follow what I do on GBTC and you follow me on Twitter, then I tweeted about GBTC being up at one point almost 15%, like 14.5%. And if we were still in trading hours, I'd imagine that this would be up even higher because all day today, GBTC was about 3 or 4% higher than what Bitcoin was doing. So if the momentum on Bitcoin continues, not just today, but even into the weekend, see here we are at the bottom of this wick that we had from December 4th, that really crazy December 4th day. If the momentum continues, then not only Bitcoin, but GBTC will be on the rise. Okay, so enough about Bitcoin. The DXY came down hard this week. As you remember, where we last were on January 28th, this is the candle that we were on, and I put this line, and I wanted to know if we were going to stay above it and move up. We sold down. And what's interesting is we had the ECB come out and basically say more of the same that they've been saying. And that was actually very positive for the euro. If you looked up the euro US dollar, so let me go to the euro. On the euro, we had just a huge move up yesterday on that, over 1%, which is a huge move in FOREX. And all of the euro pairs moved positively in favor of the euro. And the euro makes up more than 50% of the weighting of the DXY. So definitely something to be aware of. And the dollar index now is at the lowest possible place that it could be at as far as like where it touched today. It actually wicked below our support line. So the question is, because like if you think about it, look at what happened. We had this consolidation. We broke down, but it was a fake breakdown. And then we came up, and then it was a fake breakout, and then we came down. So are we going to just continue more to the side? Or is this resistance going to stay, or this support going to stay true, and are we going to continue back up? Or are we now going into a new trend to the downside? So a lot of stuff to be looking for in the next week, along with yields breaking out to new 52-week highs. We haven't been at this level since 2019, it looks like, and early 2020. So we're getting close to that level, that yellow line that I put at about the 2% yield level on the 10-year, where I'm wondering if that's going to provide a problem, because that's just below that is where our resistance was, and then support going back to mid-2019. Something to definitely be watching for. Gold, kind of not really doing much, holding its support level here this week. Silver, doing even less. And so the precious metals, after looking pretty good up to a couple weeks ago and puking that back before last week's update, just kind of holding sway to the side. Oil is the big story, getting above $90, easy above $90 today. And it's just been on a tear. It's just insane to think of like where we were in 2020 when oil went negative. And oil just continues to march. It's just another situation where if you think oil's going to 100, I guess you just buy. But this kind of price action is usually unsustainable, but I think I've been saying that for a while. So it's due for a pullback, but who knows when that's going to happen. But it's just something I'm not going to try to chase because I've already got other interests. Here that's the big thing. Like and oil is the biggest indicator. Like oil being at 90, and even like Brent crude, if I could find Brent, is even higher. So with all that in mind, this is the biggest indicator of inflation. And so that's exactly why the Fed and even the Bank of England talking about how the Bank of England raised rates, and they're looking to raise rates even more within the next few months. The ECB is signaling that they're pulling back purchases. Obviously, the Fed is scheduled to end their purchases in March and looking to raise rates shortly thereafter. The market's pricing all these rate hikes in because inflation is going crazy like this. And so the big question is the bounce that we got today in the equity markets is our bounce these days, which really came on the backs of Google having blowout earnings and announcing a 20-to-1 split, and then Amazon yesterday having blowout earnings. All of those things able to kind of how can I say, offset what happened to Facebook. Facebook dropped 26%, and even today ended red. But then you had Google, which just took off, was up, quite a bit, over 7% on its earnings, and Amazon also up on its earnings, up over 13% today off its earnings yesterday. So that has kind of helped because obviously the S&P and the NASDAQ are both heavily weighted towards that. So you can actually see that in today's price action as well as in the price action from earlier this week. But then interestingly, like the Dow rode that momentum too, but didn't have the same kind of positive day today that the NASDAQ and the S&P had. So that's the big question: is all of this the sign of the new bull trend going up? Here we are making the lower low at particular Fibonacci zones, and are we going to go back down? Are we headed lower? Is Bitcoin going to? Is this another little pump before a dump in Bitcoin? Who really knows? All I would say is the markets are uncertain and a lot of people are excited, so I would be really careful about the FOMO, like on Bitcoin, on the NASDAQ, and so on. Be careful with your positions. Trade carefully, know where your stop losses should be, and stick and commit to your positions. I will be holding sway looking forward to next week. I'm in a position of power, so I'm going to stay neutral, not entering into any new positions until I see the markets more clearly. And with that, I'm going to end. So if you thought this video was interesting or helpful, if you thought this was a good look at the markets, feel free to like and subscribe and share it with somebody who you think it would help. And with that, have a great day and a great weekend, and I'll see you guys next week.